Welcome all in to the All In Advisor Access podcast. We are all up and running. I am your host, Blair Barton, CEO and Senior Financial Advisor of Auxiliary I&I Financial Services, and joined by Eddie Donan, one of the GTA's top real estate agents at Century 21, the Eddie Donan team. Welcome in, my friend.
Thanks for the introduction, Blair. You're fantastic. How are you doing, man?
I'm great, man. Great week. I got a summer suit on today. I got this bright spotlight on me. I feel like I'm about to hit the beach for a drink, but everything's going really well. Super busy week. We recently just launched a new tool with our guest actually on our site that's performing really well and helping Canadians.
I saw that. It's actually pretty cool. Pretty good stuff.
It's been phenomenal. So without further ado, I would like to welcome in Jennifer Koshul from Assumption Life. Welcome, Jennifer.
Well, thanks, Blair. Thanks for having me. Hi, Eddie.
Nice hey, Jennifer. How are you? Very pleasure to meet you.
So we actually have a trifecta of something very special here today because Jennifer and I share the same birthday, and Eddie's father has the same birthday as us. So connection all around. Aquarius, February 10th. Very exciting alignment that we have going today.
That's how I've known Blair for a while as we talked on other shows, and that's how I always remember his birthday. It made him feel special because it's really simple, It's my dad's birthday. You can't forget someone's birthday like that.
All these years, you never told me it was your dad's birthday. I thought you just remembered.
I know. Secrets out.
Bittersweet synchronicity here. Okay, Jennifer, I want to get into it. I'm very excited about having this product. And like I said, it's been performing very well in the short time that we've had it. Although we've been working together for quite some time. This has really changed everything. And I think it's been great for people that don't necessarily want to reach out to an advisor to get a quote. And people that are starting to learn that, mortgage insurance doesn't really have any benefit for the homeowner. It's more a benefit for the bank, or it's only a benefit for the bank. So let me kind of start off with a question here. That we got from one of our viewers, Jessica. What is mortgage life insurance?
So mortgage life insurance is actually a life insurance that covers the mortgage. It's not to be confused with mortgage insurance. So oftentimes a client, if they're going through a conventional mortgage less than 20% down, the bank will ask them to have insurance through CMHC. And that is an insurance that's going to protect the lender in the event that the client can no longer make their mortgage payments. So we have to make sure that mortgage insurance and mortgage life insurance are really known as two separate things. Because I have had clients reach out to me and say, well, the bank says I need mortgage insurance or I don't get the mortgage. But again, it's that confusion of what exactly it is. So the mortgage life insurance is insuring the life of the policyholder, the insured. And if they were to pass away, then the mortgage total amount would be paid off.
So would that only be, like, for example, my name on the mortgage or my wife's as well?
So if both of your names are on the mortgage and you go with the bank, if you will, or the institution, the bank provided, lender provided insurance, generally it only pays out one time. So, definitely there are different options when it comes to your mortgage life insurance. There is the route going through that the lender will offer you, but, having an independent or an individually owned life insurance policy to cover your mortgage, that if you had both names on the insurance policy would pay out two separate times as opposed to the financial institution.
Jennifer, question here. What's the difference between mortgage insurance and life insurance then?
So that would be, as I indicated earlier, where mortgage insurance is primarily an insurance offered by a private company such as CMHC, and that protects the lender should the mortgagee not be able to meet their mortgage payments or default on the mortgage. So it does not protect the person applying for the mortgage or the homeowner. It is going to protect the lender. Whereas
No, I
mortgage
got it.
life
Sorry, let me
insurance-
rephrase the question. The difference between mortgage life insurance and life insurance. That's what I meant.
Oh, okay, good. So the difference between mortgage life insurance and individually owned life insurance, or the two different types, is
Yes.
primarily a mortgage life insurance product is either offered by the financial institution or offered by an insurance carrier, and it generally is a decreasing term. So what happens is, as you pay off the mortgage, the mortgage coverage or the insurance amount does decrease, although the premiums do not decrease.
Correct.
So let's say you buy a house in the GTA and your mortgage is $900,000. You're paying that mortgage life insurance premium based on the $900,000. As you pay down that mortgage, let's say it's only worth $50,000, you're still paying the premiums of a $900,000 policy.
Yes.
But the coverage is decreased to $50,000. So whereas an individually owned life insurance policy, you do have the option to go with a decreasing term, but it's really no less expensive or not enough to justify that decrease in the amount. So a personally owned life insurance policy would be level. The premiums would continue, they would never increase, the life death benefit wouldn't decrease. So that's primarily the difference. Also, when it comes to having a bank-owned mortgage insurance policy versus a personally owned, the bank is the owner of that life insurance policy if you go with them. They are also the beneficiary of that insurance policy. And so if you were to pass away, the bank benefits. Well, I guess your heirs would benefit to a certain extent in that the mortgage is paid, they no longer have to pay it. But having that personally owned life insurance, you're the owner, you assign who the beneficiary is, they can choose whether to pay off that mortgage in full or to use that money for other things.
And in the industry, a lot of people ask me that when closing, when we presented mortgage documents or the mortgage agent presents the documents. That's why I always refer them to speak to a specialist like Blair, because I've heard all of these things, right? And obviously the banks right now, the financial institutions, they're really pushing their insurance products. But I've heard things, first of all, the decreasing value. That's a main area of concern for myself as an agent when I advise people to speak to an expert, but also the underwriting policies. I heard that sometimes they're not properly underwritten, and I've heard, not personally with clients, thankfully, but I've heard of policies refusing to be paid out because they weren't done properly. I mean, somebody just initial under mortgage that they were going to take insurance, and that's all that happened. And later on, they found out about pre-existing conditions, and there was a whole can of worms.
Well, and that I am going to make a comment on that, because that really is one of the number one reasons you want a personally owned life insurance policy through an insurance company, because banks don't qualify or underwrite your application until the time of claim. So if you had pre-existing conditions, any health conditions, you're answering 4 little questions on a bank insurance application, which generally the person asking you to sign that mortgage insurance or mortgage life insurance document at the bank is not a life insurance advisor.
Correct.
They're not a specialist. They may not even know what the life insurance entails. And so an insurance company, they are going to vet you beforehand. So they're going to do their medical requirements, maybe send a nurse out to see you, ask some questions, do some blood work. When that insurance policy gets approved and issued, they've already done the back work. So when it comes time for claim, that is going to get paid. Oftentimes that post-claim underwriting, the banks will find kind of loopholes, and as a result, just return the premiums paid.
Right.
Which, that's certainly not the best option for anybody.
It's a shame. I mean, in such a difficult moment that families are going through, as losing somebody in their lives, and then, worst comes to worst, they don't even have money to pay their mortgage, and they thought they had insurance. It's just catastrophic.
Exactly.
Jennifer,
yes.
What happens if we were to change our mortgage? So if we were to switch lenders, what would happen in that event? Does the coverage still go with us?
Well, and I love this question, because what happens is, if and name your bank here, I'm not going to promote one over the other, But so let's say I buy my home and I have a $500,000 mortgage and I have a 3.99% interest rate. Well, the mortgage rate over the years, as it has with us, has dropped to say 1.69 or 1.99%. So I want to chase that better rate. So if I look at breaking my one mortgage and I move to another institution, I now lose the existing life insurance that I would have had through the bank. I have to reapply at the age that I am when I do apply, because mortgage insurance or mortgage life insurance is not portable. Whereas with a life insurance policy, I apply once and it comes with me because I own it. And as much as it's, great, I'm using this to potentially pay off my mortgage, it's not actually tied to a mortgage. So that's why it is portable and I can take it with me, which, funnily enough, the average length of a mortgage, even if it's a 5-year fixed term, is about 3 years. So a lot of folks are either buying new houses or they're refinancing and they're building in their debt and they're changing that initial mortgage. Even if they stay with the same lender, if they refinance and add in their debt to that mortgage, that amount's not going to necessarily be covered under that first initial plan. So, personally owned life insurance, far better in every capacity than a creditor product through your bank.
So that would be the same as when the mortgage is paid off, we can take it with us then.
Well, absolutely. Absolutely. If you pay off your mortgage, good for you. But then you have no life insurance coverage. And what happens if over that period of time, you've become uninsurable? Mm-hmm. So, and another thing that I do find with the bank creditor insurance versus a personally owned is we all have a permanent need for insurance. Once all of our debts are paid for, we do need final expense coverage, whether it's to pay for our funeral, our estate planning, our taxation. When you have a personally owned life insurance policy, those are generally convertible without proof of insurability. So I can take that term and I can convert it into a permanent, and that way I can take care of all my final expense needs at the same time. Whereas that is not an option on a group creditor life insurance product through the bank.
Fantastic.
I'm actually had a question that was emailed to us. And I mean, you've covered just about everything in your presentation. But I guess it's pretty clear that the policy does belong to their families, not the banks, right? That's what you were touching on, that if they were to refinance and change that status, and also if they were to pay their mortgage. I had another question. Is there ever a situation where they would not qualify? Like, what would make somebody ineligible for coverage with your company or with Blair, for example?
Okay, well, and that is a fabulous question. So, part of the challenge, and I don't know if this is because we have a free healthcare system in Canada, but people go to the doctors, and when you go to the doctors, you might find out you have certain health conditions. And so generally, if you have a history of heart disease, if you have a history of cancer, diabetes, high blood pressure, cholesterol, a myriad of certain conditions, you will find it a little bit challenging to get a regular, or what we call traditional, life insurance product. So insurance carriers have come out with a different suite of products, if you will, and they are geared specifically to that harder to insure client. And so the products are actually designed to be able to offer insurance to someone that has potentially harder to insure situations. So that's absolutely imperative to have a licensed life insurance specialist on your side, Blair and the team at Oxy, because they can actually work with you to find out what your medical conditions are and create a plan and make a suggestion for you based on your specific health condition. Whereas applying to the bank, click, 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 or check, 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 it probably will not get paid out at time of claim because you had medical questions or medical, conditions. So,
I agree 100%.
With an insurance carrier and an advisor who, if you're perfectly easy to insure, they can offer you one particular product.
Right.
But if you are challenged medically, you can look at another product that is going to pay out at the time of claim.
Yes, and we actually we do have access to those products as well. Jennifer, I would like to ask, or I'd like to hear you talk a little bit more about the Better Insurance mortgage product that we've recently partnered with Assumption Life and yourself to add to Auxiliary I&I, Oxy.ca. Can you talk a little bit more about how that works and how people can go kind of self-direct and go to that product themselves?
Yeah, absolutely. So sometimes what we find in the industry is, clients that maybe they don't want to speak to an advisor and they would like to do it all on their own. They would like to have an option to be self-directed when it comes to their life insurance policy. And so we've actually created a portal, if you will, partnering with Oxy. And you can go directly onto the Oxy website, which I believe is auxii.com.
.ca.
Sorry, .ca. We're in Canada. .ca.
All Canadian, yeah.
Okay, all Canadian.
Yeah.
And you can actually go in there, and there is a link on the website where you can click it and get a quote based on your own needs for your mortgage life insurance. And the beautiful thing is that you can do just life insurance, but it gives you the option to really make more of a flexible plan. Perhaps you need disability coverage. So if you're not able to work, how are you going to make your mortgage payment due to a disability? So that's an option that you can quote yourself. And then also a critical illness. So say you get cancer, a life-threatening cancer, and can't work, that would be a lump sum of money that's paid to you, not to the bank, to help you pay your mortgage payments while you focus on your chemo and get better and go back to work. So this is available, as I said, a link through the Oxy website. Click, run your quote. You'll get a good, a better, a best, being the bundle. And then if you so desire, you can take it right to completion and apply for your life insurance completely online, completely by yourself, without having to see an advisor. Note that you will be contacted afterwards because it is absolutely linked through Blair and his team. So they'll make sure that you're well serviced. And if you do have any questions, their phone number is right in there. The email, you can email right from within. So any questions that you would have can be answered by Blair and his team. So it's really the best of both worlds. It allows you to be self-directed, but it also has the support should you need it.
And the fantastic thing is right on the page itself, if you do have questions or if you want to go through with it and then have some follow-up questions, maybe if you want to talk about getting some investments or setting up some other products for your kids or whatever it is, there's a book button. You can go in right in that time, in real time, book a time with us and for the most convenient time for you. So you're like, oh, you know what? I don't know. I don't want to call this guy right now because I got to get into this thing, or, I don't want to call this person for that. Just go into the calendar, book it. Meeting is set up. It's set in stone, and one of our team members will be happy to help you. You can actually add a note to who you request to speak with, and usually it's me, but always happy to help. But that's fantastic. We're super excited about it. We launched it. We added it last week. We launched it this week. It's done so well. And I've got a lot of DMs and a lot of messages saying just how fantastic this is. And, there's people that they have other people in their lives that they want to get life insurance, but the people just don't want to go through with it. They maybe have some anxiety about talking to an advisor, or they just don't want to bother talking to somebody until they go through with it. So it's absolutely incredible product. We're so excited about it. And it's free to go do, get your quote, find out where you stand, and find out what we can do for you.
Well,
Jennifer, I wanted to add, it's been a great presentation. In my field, this is something that indirectly I get asked all the time. Even though I'm a realtor, but I'm very hands-on and very involved in guiding the clients through the whole process, including their mortgages. And that's a question I always get asked: should I get the mortgage insurance right now? Should I get the life insurance? I always tell them to speak to a professional, right? Not to not to go against the banks, but I always advise them to go independent. Always. I say it's just because of what I personally researched before this meeting and And from my experience, I find it's a way to go to get something more tailored, like you said. And I think the key points that I want to emphasize, because sometimes in a podcast, we get very technical, right? You know, you feel very well. I know I feel very well. But for everyone listening right now, the key points when you get your own life insurance, that your family owns it. From my understanding, if you were to get mortgage life insurance from the bank, as you said, it's only covering the amount of the mortgage. If you only owe $50,000 and your house is worth $1 million, it's only going to be paid out to $50,000 to the bank, not even to your family. So your family's left with nothing. That's key point number one. And there's no options for critical illness or disability. The beneficiary is always the bank. So you said it better. That's the way to go. It's definitely to go independent. One final question that always comes up, and I've had clients being told this, clients that are buying homes in their 50s, 60s, and they're told by the banks themselves or the mortgage agents that it's better for them to get the mortgage life insurance that the lender's offering than going to an independent because it's easier to qualify. Now, I don't know if that's a gray area to ask, but what can you comment on that?
So it's easier to qualify. That doesn't mean the claim is actually going to get paid.
Right.
Because I can ask you, 4 questions as a bank. Have you ever been tested for cancer? Well, as a female, every 3 years we have a specific test for cancer.
Okay.
Men over the age of 50, every single time they go to their doctor for their annual physical, it includes a prostate exam. Guess what? Those are tests for cancer.
Right.
So that could be a loophole that the bank can use to say, you said you've never been tested for cancer, especially if you end up dying of cancer. So it's, at the end of the day, it's imperative you want to work with a lender or an institution that is doing underwriting at time of the application and not at the time of the claim.
Right. And then that's what I heard. When I heard all these things, that it's easier to qualify. When I hear words like that, it immediately triggers that same response. Okay, easier to qualify, but what will happen? God forbid, it needs to be paid out, right? So that's great. Thank you so much.
Well, and I
got a question for you, if you don't mind. So at what point would you have this conversation with your clients, Eddie? So when you're, because I know you're a full service guy, you want to guide your clients, send them to the proper professionals to make sure that everything gets done, correctly. At what point would you say, this is what you should do, careful before you run to the bank? Okay,
so usually the process with me starts with a meeting, a consultation, whether it's via Zoom or in person. And I'll tell them everything that I'm going to do for you. For example, in the home purchase, it's usually more geared towards somebody that's buying a house, right? If they're only selling, it's a different conversation that we have with them. But let's say you come to me and you say, like, I'm selling my condo and want to buy a house. So I'll tell you exactly what my services will include, what my services can include. Because not everyone wants me to go full service for them. A lot of people just want me to be their realtor, send them properties, find them a house, negotiate a great deal for them, and that's it, right? But you have a lot of clients that will rely on my network. Right? They will rely on my mortgage specialist. They will rely on my bank contacts. They will rely on my insurance contacts and financial planning. So I will tell them very early on that, hey, this is what the way the process works. Go to your bank, get the pre-approval, or go to my guy, get the pre-approval. And I'll have the discussion with them that once they're actually signing the mortgage documents, they should always consult with their financial planner or insurance specialist. Now, a lot of people might already have somebody that they've been working for years that they feel comfortable with. I never push for somebody to go, let's say, with you. But if they don't have anybody, then I'll tell them I have a person that works with me. I've known him for many years, and I'll pass on the information. So preliminary, I always have that available to them, just so they know that there's a process that they should follow and be careful with, especially when they're signing mortgage documents or insurance documents. But more so, the conversation really comes up at the time that they're getting their mortgage. Most clients usually, even if they're going through their bank and they're very confident with the bank person, they will always ask me, because they know I'm in the industry, okay, I'm getting this is a good rate. And then I'll remind them, I'll give my honest opinion. I'll say, like, what about insurance? Are you being offered insurance through the bank, or do you have your own independent policy? And if they're going through the bank, I always tell them, listen, if I were you, I wouldn't sign it right away. I would meet with my insurance person just to make sure that that's right for you. So usually, to answer your question, I touch it on 2 occasions, right at the beginning. But after going to see 30, 40, 50 different houses, people tend to forget about that. But usually, once the mortgage is being signed, once the commitment's there, once the house has been found and they're waiting to finalize the papers with the bank, I'll mention it, that's where they really have to make a decision.
Awesome, great answer. Jennifer, you have any questions for Eddie there before we wrap up? Got about 5 minutes left.
You know what, and I actually do, Eddie, and I was saying to Blair a little bit earlier, is, you know, I wish that we'd been connected a few months back, because I have a family member, and, you know, on a real estate side, he bought a new house, my dad, and so was selling his house in Oakville. And so because he's retired and he has all the time in the world, he decided that he doesn't need a real estate agent. He was going to make the sale himself. And I tell you, I talked him off the ledge more times than I can count on both hands. You know, and through the end of this experience, you know, I asked him, would you do it again on your own? He says, absolutely, I would not. So do you come across often folks that, you know, think they can do this themselves? And what advice would you have for the person that's thinking that, as to why they really should hire a professional?
That's a great question. I love it. The answer is yes. I do come across less now, to be honest. A lot of people now, which is odd with technology, people would think they could do it themselves, but I'm finding, at least in my network, a lot of people are convinced of using a realtor. The advice that I would give them is anybody can do anything. The internet can really walk you through just about anything. I can learn how to do teeth cleaning. I can learn how to be a mechanic, and that's the reality. But once you're dealing with a professional, they're up to date with the current trends, the information. They're day in and day out in the market. That's the thing with me right now. The information, when you deal with me, it's fresh. I have listings right now. I'm showing property. I'm active. I'm in the field. I don't have to wait a month later to read the statistics that are released by the Toronto Star or Toronto Real Estate Board. I'm in it. I'm living it. And that's critical. That's crucial. There's many times that, for example, when I was working with Blair for finding him his home, I was telling him, Blair, like this house is going to go X amount over asking, or this is going to sell for less, right? There's no way Blair, with the information that he had on the computer, would have known exactly how much that home was supposed to sell for, right? So it's not only information that's available to the public, it's also how you interpret that information with your experience. Finally, to synthesize, houses that are listed with realtors, they sell for a lot more money. Statistically, they sell for 11% higher than homes that are listed for sale by owner. Those are just statistics, they're facts, right? And the main reason why people will decide to do it themselves is because they want to save the commission. And now commissions are not fixed. There's all sorts of brokers. They can charge you from X amount to X amount. Let's say people are in the conception the commission is 5%. So they're looking to save 5%, but they will take a 10% discount on their sale price. So in reality, they're losing more money to save the commission. They're netting less. And you see it all the time. So for example, in a market like this, and I want to touch on this really briefly without going on forever. In a market like this, I have a listing that has generated 25 showings in the last 24 hours, right? Could the homeowner sell that home themselves? Absolutely. This is not a discussion whether you can sell it yourself or not. In a hot market, my 10-month-old son can put a house on the market and sell it. Like, I mean, it's not a matter of if I can sell it. Of course you can. It's a hot market. It's a question if you have a professional, can that person really maximize that profit for you to sell? Instead of selling for $1 million, you can sell for $1.05 million, $1.75 million. In this market, I feel having an agent like myself can definitely do that for you, right? So it's not only the fact that it's hot, it's how you maximize the profit. I'll tell you this much, probably if this house was listed for sale by owner, right? Just listed a mere posted on the MLS, they would have probably gotten 5 or 6 showings on that day. Still enough to get a deal. But right now, if an agent comes to me and says like, hey, listen, I have an offer on your property, I'll say, great, I have 27 other people that have seen it. Right? There's leverage. If you're for sale by owner, more than likely you won't have that type of exposure in your listing, so you're more than likely to take whatever offer is given to you, and you feel it's a good deal because you're saving the commission.
Yeah. Eddie, I gotta sorry, I gotta jump in there, and but first I want to mention thanks for not throwing me under the bus there, because I remember years ago I tried to sell my house on my own, and and yeah, it just turned into a complete mess. Eddie stepped in and saved the day, and so I appreciate you not going to that story here, even, you know.
It was perfectly set up for it, though, huh?
It all ended up well, and everybody was happy, and it was fantastic. So, and the other point is, it's so true that, you know, it's funny that people, they'll go and they'll try to save a couple bucks on commission. They don't want to pay the commission. You got to remember, commission is a service-based fee. It means you're getting service from a professional that you're not going to get. Like, I know when I walk into a clothing store, for example, you can tell when you walk into a store that's on commission and what's not, because people are actually going to help you if they're on commission. And you know, commission is something that's always going to be around. They can try to fight it. Nothing beats quality, experience, service, where people have an incentive to help you, right? So
1,000%.
Fantastic point on that.
Yeah, 1,000%, right? We have a saying in the industry is you're paying commission whether you want it or not, right? And you touched that point clearly. You're paying it in service and experience and headaches. And besides the fact that I'm convinced and I'm certain, you know, Jennifer, to that point, that if you use a realtor, you're going to probably make more money than even after commission. You're actually going to make more money. But if things go wrong as a for sale by owner, you start getting billed by lawyers, right? Because you don't have an agent to represent you. So if anything goes wrong, problems with appraisal, problems with inspection, problems with closing, problems with insurance, these are things that I deal on a day-to-day basis. For me, it only takes a phone call because I have a network of people and I have 14 years of experience to help, you know, alleviate the situation. But for somebody who's only sold their first home in 40 years by owner, they're going to be calling their lawyer. They're going to be making 30, 40 different calls to fix one simple issue, and it's costing them money. So I think if problems arise, which they do in every single market, a hot market has different problems, a cold market has different problems. Problems are always there. Finding a solution for sale by owners is very, very difficult.
Okay, closing comments, Jennifer. What would you like to say here?
Well, I mean, closing comments, back to kind of working with the bank-owned life insurance versus personal insurance. When's the last time you went to the bank, and when's the last time the person who helped you out is the same person that's going to help you out next time? Whether, you know, we all think the banks are out to help us and the banks are our friends, but in today's banking world, there's such a turnover of staff that, you know, you want to really work with someone that's going to be there for you long term. You want someone that's going to work with you for your mortgage insurance today and be that same person who's going to help you with your child's education fund tomorrow, and then perhaps your parents' estate. So really working with a licensed life insurance advisor, a financial advisor, such as Oxy and their team, really, it's relationship. It's not transaction, and you want someone that's going to be there for you long term. So I highly recommend, before you do sign that bank mortgage life insurance, talk to Oxy's team and see what they can do to help you out long term.
Well, that's great, and actually, to that point, I just want to chip in on that one because it's always an interesting conversation. Because, you know, the only reason why people go to banks anymore, and again, nothing with the bank, like no problems with the banks in particular, because I work with a ton of banks. You know, Oxy is partnered with all the banks. So my thing is that when you go to a ground level on the floor of the bank and you go see a banker or an advisor, a lot of the time, you know, they're just opening up accounts. They're not really licensed, which is a thing I found out while I was hiring. I did not know that. So they'll sit down with you. I recently went to the bank to make a deposit, and this was a few months ago. And they said, "Would you like to speak with an advisor while you're here to talk about what you can do with this check?" I said, "Absolutely, I'd love to." You know, I always want to see what's kind of happening out there. So we sat down with the advisor. So yeah, well, we could, you know, let's put this lump sum in here, and if you want to start contributing, you know, really add up. I'm like, okay, add up to how much when? Like, oh, what do you mean? Like, you'll be surprised if you put a little bit of money in this account, in 30 years, there'll be a lot. I'm like, okay, great. What am I going to do with it though? like, can you further on that? And the reason for that, again, a lot of them aren't licensed, but you know, they'll have 30, 40,000 people that they see in a year, right? They all 10 minutes, they open up the account and then they never talk to them again, to your point. You know, we usually take on about 250 to 300 clients, you know, people on our staff each. And we have their birthdays, their anniversaries, we have all that stuff catered. Like, we know exactly what's going on. We meet with them every 6 months to a year to make sure that, you know, if anything changes in their life, it's so important because that plan needs to be flexible. It can't just add up to this much then. We want to, you know, accomplish your goals and dreams. So sorry, I had to add on to that. Eddie?
I think it's great, Jennifer. Again, great presentation. You answered a lot of questions, very common questions. I think everyone at one point or another that's buying a house has wondered themselves, like, hey, should I do this or should I do that? So I think we got a pretty clear answer to that. And finally, adding to service, I can vouch for it. Not only am I friends with Blair, I'm one of his clients, and the personalized service that he offers after hours even. I'm not trying to throw you under the bus because I know you might not do this with everyone, but like I can message the guy on WhatsApp at 8 o'clock and he'll reply at 8:15 and he'll have an answer for me. And that's worth a lot. You can't do that with your bank. I cannot call the bank rep from TD at 8:30 and expect an answer. I'll get an answer at maybe 11 o'clock next morning, 10 o'clock if I'm lucky. So that's a difference in service. And the fact that I like to deal with somebody that has access to a wide range of products, right? As you said, he can get me mortgage, life insurance, he can get me disability insurance, he can get, benefits for my employees. This is the type of service that I'm looking for. With one relationship that's been built, I can get access to all sorts of products from a knowledgeable professional. And I think that's the key. As Blair said, nothing wrong with the banks. I mean, we all use the banks, we're all their clients. But there requires a specialist, especially when you're transacting with something so huge, because the repercussions of what we've spoken about today can be grave, can be deep, right? A death and leaving your family completely unprotected with such a high mortgage, especially at the beginning of the mortgage term. I mean, it can be catastrophic. And the sad thing is sometimes a person might feel that they're protected and they really aren't. It's a different choice because they're all choosing protection. Most people will choose one form of insurance over another, which tells me that that person has valued what's known out there, that it can be something bad happening. So they think they're protected and they're not. So again, I would encourage to contact Blair, and through Jennifer, I think you guys can get a solution for just about anybody who's buying or refinancing or in that situation.
And Jennifer, so you have provided us with a video. We're going to show it right now. You want to introduce it for us?
It's a little video that we've created to help people understand that bank-owned life insurance for their mortgage is not necessarily the best solution, and really get them thinking about a personally owned mortgage life insurance product.
Fantastic. Let's roll it.
Your home is your castle, and chances are you protected your investment with a mortgage insurance policy through your bank. After months of searching for the right house, looking for mortgage insurance probably felt like a lot more work. But not all mortgage insurance policies are built equally. If you're insured through your bank, they own your policy, and that means they are your beneficiary. And if you decide to change banks, getting new mortgage insurance might be a problem. Depending on your age, you might not even qualify. At Assumption, we want to give you the power to make the best decisions for your home and your family. That's why we offer personal mortgage insurance. You pick your beneficiary, and no matter where you bank, your policy stays with us and with you. Get in touch with your advisor to learn more. It's the smart thing to do.